Thank you, everybody, for joining our webcast today with Cannara Biotech. The purpose of today's presentation is to give our audience a better understanding of the business through a presentation and then questions with management. The discussion is going to be led by Nicholas Sosiak, CFO. You should see the presentation in the webcast. If you'd like to receive a copy, simply email me, Glenn, G-L-E-N, @bristolir.com. We'll break for questions at the end of the formal presentation. As a reminder, this is not an earnings call, but rather a general introduction and overview presentation. We're only going to take questions through the web portal and encourage questions to help you better understand the business. If you're listening over the telephone, please access the web link that you would have received earlier today. Remember, you could submit a question using the text box within the portal at any time. I'll ask the questions on the air for everyone to hear, and then Nicholas will then answer. I'm not going to reference any names, but simply read the questions asked. And as we have a fairly large audience today, if I can't get to your question online in time and it has not yet been addressed during the call and can be, I'll come back to you by email. I'm not going to read the forward-looking statements, but I do state that they apply, and I reference them on pages 2 and 3 of this presentation, which will also be posted on the Cannara website. With that said, once again, thank you for joining us. Remember, this is fairly informal, and we do encourage those questions to help you better understand the business and its growth path. And now I'll turn the call over to Nick to start his part of the discussion and presentation.
Thank you, Glenn. Good afternoon, everyone. Thank you for taking the time to join us today and learn more about Cannara Biotech, trading under the symbol LOVE on the TSX Venture Exchange. For those who don't know me and our story, my name is Nicholas Sosiak, and I serve as Chief Financial Officer at Cannara. Since joining in 2019, I've been hands-on building this company from the ground up, working on every function from cultivation, processing, to finance, sales, marketing, and product development, you name it. The Canadian cannabis market has been volatile, marked by meteoric rises and sharp corrections. But through that volatility, only a handful of companies here have consistently grown revenue, expanded margins, and managed to create real profitability. And Cannara is one of them. And we've done it while staying true to our core: premium product, disciplined execution, and full vertical control. Today, I'll walk you through who we are, how we're performing financially, and what makes our model unique, and where we're headed as we continue to scale and strengthen our position in this evolving market. Cannara Biotech is a vertically integrated producer of premium-grade cannabis, proudly based in Quebec, Canada. We're currently the 7th largest LP in Canada by sales, and the 2nd in Quebec, where we've built our very strong brand loyalty. We also rank as the 4th largest producer by square footage nationally, and the largest in Quebec with 1.6 million square feet of hybrid indoor space, fully owned and operated by us. As of today, our annualized production rate is just under 40,000 kilograms per year, with 2 new grow zones totaling 50,000 square feet that we recently activated. Fully scaled, our facilities can deliver up to 100,000 kilograms annually with no other acquisition required. Being vertically integrated is a major advantage for us. We control everything in-house, from the cultivation to the distribution, allowing us to ensure quality and drive our efficiency and ultimately protect our margins in a challenging cannabis market. We've built one of the strongest operational platforms in cannabis. Nearly every level of our business has been evolved way beyond the standard cannabis company. We're actual real operators, we have boots on the ground, and we have a real passion for the plant, constantly refining our techniques to separate ourselves from the pack. Fiscal Q2 2025, ending February 28, 2025, represented the strongest quarter in Cannara's history. We delivered records across almost every financial metric. Our revenues were $26.6 million, up 35% year over year. Our gross profit was $10.8 million, with a gross margin of 41%, and our adjusted EBITDA was $7.1 million, up 100% year over year, and represented 27% of our net revenue. Our net income was also $3.3 million. This marks our 16th consecutive quarter of positive adjusted EBITDA and our 4th straight quarter of positive net income. Our success comes down to 3 key strengths: premium quality, scalable operations, and cost leadership. We've delivered high-end flower and extracts at accessible prices. without compromising our product integrity. Our approach combines rare genetics, flavorful high cannabinoid strain profiles, and sophisticated cultivation methods like hang drying, hand trimming, and slow curing all the cannabis that we do at scale, and without the need of irradiation. We continue to invest heavily into our genetic platform through our in-house pheno-hunting program and our strategic partnership with Exotic Genetics, helping us stay ahead of consumer trends. On top of all our market success, we maintain one of the cleanest balance sheets in Canadian cannabis, with ample free cash flow to service debt and no significant near-term maturities until December of 2027. The recent activation of our 2 new grow rooms prepares us to meet uncaptured demand for our brands and support Quebec's upcoming vape launch in November of 2025. That expansion increased our capacity by nearly 20%, or 6,000 kilograms, and all for a $1 million investment. We believe that this ability to expand our capacity with minimal capital is a major competitive advantage and represents one of the highest ROI investment opportunities in cannabis today. Our market share continues to outpace our peers, driven by quality cannabis offered at affordable prices. This is made possible by our low-cost operation, scaling efficiencies, and access to Quebec's low electricity rates. As of May of 2025, we hold a 12.3% share in Quebec, up from 9% a year ago, a 40% increase. In March alone, we gained 60 basis points, while the second largest LP lost 80 basis points. And now we're just 60 basis points away from being number 1 in Quebec. This is especially significant in Quebec and sometimes overlooked by cannabis investors because Quebec is the only province in Canada where almost no promotional activity is permitted. With no sales and marketing levers, the only growth here reflects the product quality alone, a key signal of our ability to win across Canada. Nationally, we're the 7th largest LP with 3.9% market share, up from 3.1% last year, a 27% year-over-year increase, making us one of the fastest growing LPs in the country. Looking at our CPG portfolio, some examples of our success is that we're the fastest growing infused pre-roll multi-pack in Canada. From March to May, we grew our category share by 40% to 8.5%, while the number 1 competitor declined. In Quebec, we hold a commanding share of 73% of the infused pre-roll market, making Nugs the undisputed leader in this province. In premium vapes, we hold over 22% national share, with sales up nearly 70% year over year, despite being the highest priced product in the category. This confirms our ability to win not just on price, but on quality. That same vape performance, we believe, will give us a very strong position ahead of Quebec's vape launch this November. Tribal leads also the premium 3.5 gram flower segment nationally, now holding over 18% of that category, with pricing at $30 in Ontario. We have created a disruptive value versus the ultra premium offerings at $50, and it often is the same or lesser quality than our own brand. As just shown, our brands are winning in some of the most competitive categories in Canada, from infused pre-rolls to live resin to dried flower. That performance reflects a clear brand strategy executed with real operational discipline. Let me go through the brands. First, Tribal is our flagship house of genetic brand, built around exclusive cultivars, high THC flower, and premium extracts. Thanks to our Canadian exclusive partnership with Exotic Genetics, Tribal is able to bring proprietary genetics, giving us a unique advantage in both dried flower and live resin products. Nugs is our format-first, trend-driven brand. It thrives in the fast-moving categories like bulk flower and infused pre-rolls. Nugs delivers premium quality at accessible prices by leveraging exclusive high-yielding genetics, excess Tribal inventory, and full in-house manufacturing. And our third brand, Orchid CBD, is designed for those looking beyond high THC products and more for a balanced, terpene-rich, full-spectrum experience. Leading the way is our Orchid is our CBD runs genetic which holds the title as Canada's #1 CBD flower. When we talk about premium cannabis, it all starts with genetics. No matter how well you grow, the consumer experience begins with selecting the right phenos, those that hit on yield, potency, terpenes, and can be still grown consistently at scale. That's why we built a fully in-house pheno hunting program. Every year, we screen thousands of genetic phenotypes to select just 2 or 3 that deliver the right mix of quality and operational performance. But it's not just what we grow, it's how we handle it. Every harvested plant, even at our scale, follows a disciplined post-harvest process. For flower, everything is hang-drawn, hand-trimmed, and slow-cured in vacuum-sealed bags. Our live resin starts with fresh frozen material, frozen at harvest, to preserve the terpene content that is unachievable by using dried material. Many LPs can do this at small scale, but what sets Cannara apart is we've engineered our entire operation to deliver this kind of premium at a commercial scale, and we do so profitably. And that combination, top-tier genetics, refined post-harvest methods, and scaled execution is what positions Cannara to lead in both product quality and national market share. To support our scale and our full integration plan, Cannara operates 2 mega facilities in Quebec, providing control across cultivation, processing, and manufacturing. Our first facility, Farnham, spans 625,000 square feet with 170,000 square feet currently dedicated to cannabis operation. It houses our nursery, our pheno hunt program, our post-harvest process, and packaging lines, as well as rooms for solventless extraction and pre-roll production. The remaining space is leased to non-cannabis tenants, generating over $3.8 million in annual rental income, a real unique advantage that offsets costs and really supports the positive cash flow in building the cannabis operation. Our second facility, the Holy Grail, Valleyfield, spans over 1.1 million square feet and is one of the largest indoor cannabis facilities in Canada and the largest in Quebec. Purpose-built for hybrid indoor cultivation, it houses 24 grow rooms, each measuring 25,000 square feet, designed to replicate optimal indoor growing conditions. We operated 10 grow rooms during the last reported quarter and successfully hit our fiscal 2025 goal of activating 2 additional rooms, 1 in April and 1 in May. This brings nearly 6,000 kilograms of additional capacity, increasing our total run rate from 33,500 kilograms to just under 40,000 kilograms. Valleyfield is a cornerstone asset for Cannara. We acquired this facility in 2021 for $27 million, compared to the original build cost of over $250 million, a result of the early legalization spending frenzy. That acquisition gave us access to world-class infrastructure at a fraction of the cost, unlocking mass-scale, low-cost cultivation that few others in Canada can match. We're delivering strong market share growth across Canada, and we've yet to hit our demand ceiling. There are still multiple product formats and packaging sizes that we currently don't offer, and our in-house pheno hunting program continues to unlock exclusive genetics that will fuel and continue to fuel the Canadian retail demand. While we see strength in the unbranded wholesale market and growing international market, these channels are not currently our focus. Instead, they represent future upside and optionality for us, further supporting our decision to continue expanding our capacity. Over the next 36 months, we plan to activate the remaining 12 rooms at Valleyfield, scaling our total cultivation capacity to 100,000 kilograms per year. Our key advantage, the ability to scale without significant capex. The infrastructure is already there, requiring only lighting, tables, and HVAC to bring each room online once our processing center is fully built out in 2026. The 2 most recent rooms, activated in April and May, as I mentioned earlier, just costed $1 million to turn on, and we expect the payback period to be well within the first year of operation. But what excites us the most is that at full scale, Valleyfield alone could support $250 to $300 million in net revenue, assuming the current market condition dynamic hold. As Canada's second largest province with over 9 million people, Quebec is our home field, a key strategic advantage for Cannara. One of the most compelling benefits in Quebec's exceptionally low electricity rates, just 5.3 cents a kilowatt compared to provinces like Alberta, when rates can reach up to 14.1 cents a kilowatt. Since electricity and labor account for over 75% of indoor costs of cultivation, operating in Canada is a major cost advantage, allowing us to price our product competitively while maintaining industry-leading quality and margins. But the advantage goes beyond cost. Quebec also has the highest barriers to entry in Canada, including strict limitations on sales, marketing, and retail data access. Fewer LPs, fewer brands, fewer stores, and yet Quebec still ranks as Canada's third largest cannabis retail market. For Cannara, this has created the perfect condition to grow: high demand, low competition, and favorable economics. As of Q2 2025, our year-to-date results show continued momentum across all key financial metrics. We've generated $51.7 million in revenue year-to-date, while maintaining a gross margin of over 40%, a reflection of our disciplined cost control and pricing power in a competitive environment. Adjusted EBITDA came in at $13.1 million, and we are operating cash flow positive year-to-date at $3.3 million. We continue to maintain a strong balance sheet with over $5 million of cash and $40 million of working capital, giving us both financial flexibility and resilience. In addition, recently post-quarter end, we made a $1 million repayment on our convertible debenture with Olymbec, one of Cannara's largest shareholders. We also secured a 50 basis point reduction on our credit facility with BMO, bringing our borrowing facility below 6%. A key milestone as we continue to reduce our interest burden and improve our capital efficiency. Lastly, it's worth reinforcing insider ownership remains above 50%, reflecting deep alignment and long-term commitment from leadership team. And as you can see on this slide, our profitability isn't a one-off. It's part of a consistent multi-quarter trend. We've scaled revenue, we've grown our EBITDA, and we've improved our margins year over year while maintaining operational discipline. That's what sets Cannara apart. Cannara has one of the strongest financial profiles in Canadian cannabis. On an annualized basis, we have been net income positive since fiscal 2021. We've been operating cash flow positive since fiscal 2022 and free cash flow positive since fiscal 2023. And our performance over the last 8 quarters shows that consistent, scalable, and profitable growth, a rare feat in our sector. While many Canadian LPs right now are expanding overseas because of necessity, we're actually thriving here in Canada, and it's by choice. The reality is most can't compete profitably here. They're losing share, struggling to build brands, and failing to operate efficiently. The industry isn't just about capital. It's about experience, execution, and discipline. Cannara has built that from the ground up. We are operators. Every process we've developed is designed for long-term success and not just short-term survival. We're cannabis advocates. We're market leaders and disciplined operators. We're going to build this to become a leading Canadian cannabis operation. But our results speak for themselves. 16 straight quarters of positive EBITDA, industry-leading margins, operating and free cash flow positive, 30% market share growth in just 1 year. We're winning across all top categories with constrained supply and growing demand for our brands. And we control one of the best organic expansion opportunities in the country, with the ability to more than double our capacity internally at a really high ROI without any acquisitions. We built a solid, strong foundation, world-class operators, financial strength, and it's all been relentless execution. And that's why we believe that Cannara is positioned to lead the future of Canadian cannabis. Thank you for taking the time to learn more about Cannara. I'd be happy now to open the floor and take your questions.
Super. Thanks, Nicholas. And to our audience, again, if you have a question, please use the question text box within the portal to ask that question. We do have a number of questions in the queue, so we'll get going. So first question, Nick, you're obviously a leader in Quebec. Can you just talk about how you differentiate yourself outside of Quebec? As you've grown into other provinces, have you had any learnings nationally, either regionally or I guess interprovincially, how you sort of see the different markets and as you evolve in those marketplaces?
Yeah, absolutely. It's a great question. I mean, we've been in many markets for since as early as 2022 in other markets in Quebec. And what we notice early on is the products that we create are not, only for the Quebec market. They resonate with consumers all across Canada. There's brand loyalty. People are every time we do these events, consumers and bud tenders express the gratitude and for the brands and the products that we're building. The biggest difference is that is the distribution. It's a different game. The retail network is not controlled by the government, and there's compared to Quebec, and the fact that sales and marketing is allowed, then there's a bunch of initiatives that you have to do to get on the shelf. And that's the most important thing, is to be on the shelf outside of Quebec to be able to sell your product. And so that's part of our program. We don't really change our products, whatever we create for Quebec and Ontario, other than barring the regulations that make us make unique products for Quebec. Our products resonate with all consumers in Canada, and it's a matter of just deploying smart and proper sales and marketing strategies to gain distribution over time.
Okay, super. Thank you. How meaningful is the contribution of non-flower SKUs, example, vapes, edibles, apparel, to revenue and margin today? And what are your expectations for growth in these categories?
So it's a bit of I'm not sure if you're talking about just dried flower and not like non-flower, because vapes are made from all our flower products.
I guess non-dried would be the question.
Non-dried. So a very big portion, almost 50% at this point now. When you combine infused pre-rolls and you combine vapes and hash products and rosin products, about 50% is dried products and 50% is a product that has concentrate in it.
Thanks. Do you see any benefit in the cannabis industry from the recent removal of internal trade barriers across provinces? How does this impact cost, supplies, efficiencies? Anything you could comment on that?
I'm not aware of the changes between provinces.
Interprovincial trade. I think they removed some barriers recently, some tariffs. I don't know if that affected you or not.
Not right now. We can, if it's for retail, our products go from Quebec all the way to every single province across Canada. On the wholesale side, we're not limited. If we do sell product on the wholesale, you're not limited to any province or restrictions to a province. The only thing that you have to consider is the excise tax. Potentially the question is talking about reforming the excise tax, instead of having provincial excise tax, to have it one national excise tax, which would definitely help operational efficiencies. It wouldn't change it drastically from a cost point of view, but from an operational efficiency of keeping products, not having, right now we have to manage inventory for products for Quebec that are exclusive for Quebec and for Ontario, because as soon as you put the Ontario tax stamp, you can only sell it in Ontario. So I've heard that they're working on changing that, but that's not implemented yet.
Okay, thank you. Are there any competitors that are emulating you when it comes to new genetics?
I mean, I think there's some competitors that are starting to realize that genetic is the name of the game. I've been saying it for the past 5 years now, but they're starting to catch on. But what's special about genetics and cannabis is right now I can't even put a number in it, but we'll just call it an infinite number of genetics and phenotypes that we could find that have different experiences, and then from the way you grow it to the way you treat it post-harvest, when that product comes to the consumer's hands, it's a full different experience. So you got to have not only the genetics, but you have to have the whole process of getting quality cannabis out there. So yeah, there's definitely competitors that are building their PhenoHub program as well, but everyone's kind of doing their research and development on their own, and it's who can find the better genetics and the one and grow the better genetics, as we build out the this part of the industry.
Okay, super. And I guess on that topic, with respect to your pheno hunt, can you walk through your R&D process, your pipeline, your timeline for genetics discovery to product launch, and how many SKUs do you expect annually?
Yeah. So it's a very long process. I mean, it all starts with seeds. Usually we do it 4 times per year on a quarterly basis. We start with 250 to 300 seeds, and it's usually it's a mix between 10 to 15 different genetics with 10 to 15 different phenos in each one. Once you grow from seed, you have to grow that into a mother plant, so that takes 3 months, and then you have to go into an R&D batch, which takes another 4 months, 4 to 5 months before by the time you dry it out. And then now you've narrowed down your 250 to 300 different plants to probably 50, 60, 70, that are because they don't grow the same way. If you're you're doing a pheno hunt within all kinds of varieties, and then just itself growing a row of that plant. So to really understand the full genetic potential, you have to grow, a healthy amount of those plants. So then that's phase 2, which takes another 5 months to grow once you selected your 70 to narrow it down and focus on that. And then finally is testing the product and having sensory tests and checking out the yield, the THC, the terpenes, and seeing if it fits into one of our brand profiles that we want to build out. And if it all checks all those boxes, then it becomes a commercial genetic, and then we have to regrow it again, which takes another 5 months. So we're talking 15 to 16 months of time between initiation of a genetic and finding that genetic. And it's, we're lucky if to hit all those boxes out of that 250 to 300, you're lucky if you hit 2 to 3. So that's, it's a 1% chance of getting that unicorn. But that's what we've been doing, and we've been very hard on making sure every box checks. And we've thrown out really good genetics that competitors would have commercialized, but it didn't hit every single box. And I think that's the name of the game right now, is to spend that time and develop that. And all that internal R&D is internal to each company on their own, right? That's IP that's getting built right now by each and every company, and however they're doing the pheno hunting process, and finding those genetics and keeping them. Then no one can find that exact pheno, right? Because if I have a pheno of gelato mint that is producing and has all those traits that check all those boxes, and a competitor goes to find a seed of gelato mint and grows it, there's less than a 1% chance that they would be able to replicate that same pheno. Just like mothers, parents, and kids, you give birth to your children, you're always going to have different kinds of children, and that's just the genetic morphation of the cannabis plant. And that's why I was just saying that there's infinite possibilities. I've never found one plant that so far was like the exact identical and crossed all those boxes and was the exact same plant, right? So it's a very interesting part of the business. A lot of R&D and IP is getting built in that part of the business, and I think that's definitely going to pay dividends in the future.
Thank you. Can you provide more detail on the CapEx and operating costs per additional grow zone, and the expected timeline for payback and margin contribution from each incremental increase in capacity? And then based on what is the expected capital expenditure to reach full capacity of 100 kilograms, at what utilization rate is required to maintain current gross margins?
So
A lot there.
that was a lot of questions, but I think I got most of it. So like I said, these two rooms that we just opened up only cost us $1 million. Going forward, it's about $1 million per room. So we have 12 rooms going forward to build out. So just as simple napkin math here, a room generates 3.5 tons of cannabis, so 3,500 kilos, and we sell it at $3 a gram, so it's about 10 million to $11 million of revenue. And we make right now a 40% margin, so well within a year payback period on that investment. The biggest roadblock right now where we're at is I think we've de-risked the operation a lot. Like we've turned on 12 rooms, we've executed 12 rooms, and we're operating on that. And now we just gotta take those same 12 rooms and replicate it on the other side. But in order to continue our 12 to 24 room or 13 to 24 room, we need to build out our processing building, which is mentioned in my deck. And that's a 200,000 square foot facility that's attached to the main greenhouse. Right now, the whole shell is built out and everything's built out, other than the inside and the rooms and the layout, which we're building or budgeting that investment for 2026, starting the project this year. And that's about a $10 million investment. And that's going to be completed well within 2026. So then we'll be on track to be able to turning rooms 13 to 24 on right after that. So to double our capacity, we need about $22 million. And that's going to be spread over 2 years while we've seen we're already generating operational cash flow and, forecasted that that's going to be self-financed with additional help from one of our partners.
Okay, super. I think you just partially answered the next question, but I'll ask it and maybe have you expand on it. Will your 3-year expansion plan be financed via internal cash flow and tapping into your debt facility, or will you need to raise any equity?
The first one, yeah, absolutely. We're already cash flow business. We're not looking to raise equity or dilute the shareholders at this point. We're operating. We built this. We haven't raised equity since the Valleyfield acquisition, and we've been working hard all these years while the market has been doing its own thing, and we've come out, we feel, through these hard times pretty strong, and we're only going to get stronger. Yeah, the build out will definitely be utilized our internal cash flow as well as support from our debt partners.
Okay. Next question. Thanks. Thank you for the presentation. On slide 11, can you comment on how the kilogram yield per room seems to increase in year 27, 28, and 29?
The ramp up. So the ramp up that you see from on our slide 11 is opening the rooms from where we are now at 12 rooms to 24 rooms, and you'll see that a cadence of like about 2 to 3 rooms per year, and then you'll see a spike in the last year, going from 75 to 100, which is probably the question and the anomaly in the trend. And good catch for whoever saw that. That comes from opening up our 200,000 square foot rooftop at the top, where we're going to be able to do the vegetative process, which is it's about a 3-week cycle that you have to veg the plant, and that 3-week cycle right now we're doing in the current rooms. So we lose those 3 weeks across all those rooms. So once we move the veg cycle outside of those flowering rooms, we're going to be able to go from 4.5 harvests or 4.7 harvests per year to about 5.6 harvests per year. And that's what automatically across all the rooms, right? And that's what scales our production capacity and brings us to the final, to the 100 kgs.
Okay, super. Thanks. I think you just answered this question too, but I have to ask it. How many grow cycles do you have at this point now?
Jesus, I'm ahead of it. Yeah, so right now we're about 4.6, and we're looking for that 5.6, and that can be achieved two ways. With our original plan, which is opening up the Valleyfield facility, um, and some potential other plans that we're working on, and keep it under the works for now. But some potential plans might bring up that plan a bit sooner.
Super, thanks. Can you mention which provinces you're currently licensed in, and are there any plans for expansion outside of those provinces?
Yeah, absolutely. So we're Quebec, Ontario, Manitoba, Saskatchewan, BC, and Nova Scotia. We're just getting listed in Newfoundland, and there's a couple of other territories and east provinces that we can continue to grow in, and um, we're definitely looking to into those provinces. Just There's just so much opportunity in Ontario and the main provinces that we want to focus our marketing and spend dollars on the best ROI, which is the main provinces. So we're not when the time is right and when we can put resources on those provinces that will marginally scale. Like, these are not going to double triple revenues, right? These are marginal additional revenues to the company. We're going to build out those avenues, but this year we're looking at Newfoundland to work through.
Super, thanks. Again, to our audience, if you have a question, please use the question text box within the portal. We've got a few more questions in the queue here. Nick, any plans to enter the medical space?
So we do sell our product medically to our partner Mendo. Um, do we want to create our own medical program? Potentially, potentially. It's not on the real focus right now is the Canadian operation, the Canadian retail focus. And as we build out those rooms and see, grow into that, and we want to make sure that we have enough product for retail, and that's the fine line between, having too much product and not product while opening up your distribution lines. There's a fine line, and then you have to manage that properly, and you have to be for the government, like, that's our client. You have to be like, they have metrics on, everything on you, right? And you want to be their best client, right? And that's the goal. So definitely something on the back burner, but not our main focus.
Okay, thank you. Um, you clearly are differentiated by being one of the only profitable cannabis growers in Canada. Can you just talk about the market evolution, what you've seen since the beginning? I guess early uh, companies that entered the space, where are they now? Just overall learnings in the market over the last few years since cannabis has became legal recreationally.
Yeah. I mean, most of the guys that were there are no longer here anymore. I believe Cannara has a larger market share than Canopy right now, so um, and sales. But what really, I think, happened in our industry is there was a lot of excitement, a lot of hype, a lot of money um, came in, and unfortunately, it's a new industry. It's an industry that you know was never no one's ever grown mass scale cannabis. No one's ever grown a brand under all these regulations in cannabis and all that. So I say this often, is that there was no phone number or consultant that you can call to help build the business, right? And that's what, sometimes money does buy a lot of things, but money couldn't buy expertise in this scenario. There was no expert at this large scale to create this company and, do this. So I think what we see are the survivors, are the real operators, are the ones that, started the business, maybe knew a little bit about cannabis, knew nothing about cannabis, but then rolled up their sleeves and went into the operation, learned their own operation, built it from the ground up, learned the mistakes, fixed the mistakes, and, learn from the customer and build all that out and every single day, and new challenges every single day because things are constantly changing. And I think that's what's, coming out of this the dust right now are the real operators that know how to run a company, know how to run a cannabis company, learned from the consumers, understood the consumers, and are making the right moves to survive and make it work. And from now, and then eventually it should get technically easier from here for these LPs, right? So um yeah, it's been chaotic, but I think now I think if you look at our industry now, you can really look at a handful of companies and narrow it down. I remember looking at it 5 years ago and having multiple pages of companies that I would have to do due diligence to invest in. And now it's you know it's the top 10 who are earning those revenues because cash flow is not going to come back, or financing these big projects and building these $300 million, $250 million projects are not gonna come overnight anymore. So I think it's really time for a good time for investors to look at the comp set, look at the peers and our peers, and you know easily compare their story to our story and make an informed decision if this is a good investment or not.
Okay, super. Thank you for that. I have a number of sort of capital market type questions that we're going to try to finish the call with. So first off, you're on the TSX Venture. What are your plans for uplisting either in Canada or down the road into the US?
We're definitely looking at opportunities and evaluating what our options are to move forward.
Okay. And I guess given the current state of the market, what investments are you making into bringing more visibility, promoting the company to investors? Any learnings or insight you could share on that at that level?
So I mean, we definitely do webinars like this to bring the story to new investors. We're always on the road talking to funds, analysts, working hard on analyst coverage, funds and investment banks and all that, getting the story out, getting everyone aligned on the Cannara story. We're still working with our market maker that helps the liquidity on the stock, which is one of the comments or feedback we're getting, and we've increased it from I think it was like a 20 30,000 shares a day to now 40 50 60 now, something like that. And just on Monday the other day we had our highest shares traded this year, with just close to 400,000 shares traded. So that's good news. And continually pushing both U.S. investors, Canadian investors on the story. U.S. investors are not really interested in the U.S. side anymore, and the U.S. companies. It seems like they're going through some hard times. So those cannabis investors who are pro cannabis and they like cannabis but can't find the right name, are starting to get interested in Canadian names, and kind of a name like Cannara is definitely interesting to them. So yeah, we're focused on doing everything we can. Again, the challenge is that every dollar that we spend in the business, our payback period is less than a year, and we grow the revenue and we're can double our revenue, right? Versus on the investor side, it's a more of a it's hard to measure the ROI, and you have to choose the right strategy. So um, we're pressing on both pedals, making sure that operationally we're growing, and when the numbers are going to speak for themselves. And on the other pedal, we are trying to scream the Cannara name on a rooftop.
Super. Nick, this concludes the question and answer session. So maybe some closing remarks and then we'll end the presentation.
Yeah, thank you. So just want to thank everyone for joining us today. And if you're new to the story, uh, definitely available to answer any follow-up questions. You can message Glenn or directly myself. And yeah, we're just I mentioned a little bit myself, but just for those new to the story, the CEO, uh, president and founder is Zohar Krivarot, who's um, has been for the past 5 years our master grower and boots on the ground too. So as much as passion and I have on the business, on the finance and the product side, we have equal the amount of passion and execution from the operational point of view from a CEO who's at each facility every single day in a year. So we have a very strong management team. We have a very strong director team, and we believe we have the platform to execute a positive Canadian cannabis story. So feel free to shoot any other questions or call me anytime if there's any follow-up. Thank you for taking the time.
Super. Thanks, Nicholas. And thanks you to our audience. This concludes this webinar.